All right, let's get right into it. Today, we're unpacking a massive financial story that really grabbed everyone's attention. The blockbuster IPO from Lenskart, India's biggest eyewear company.
And the numbers, well, they were just off the charts. By the time the sale closed, the Lenskart IPO was oversubscribed by almost 28.5 times. Just think about that. For every single share they had to offer, they got more than 28 bids. That's a pretty incredible response, right?
But here is the big question, the real head-scratcher. All this massive demand was happening even though everyone was talking about how expensive the company's valuation was. So what gives? Why was everyone in such a frenzy to buy? That is exactly what we are going to figure out.
Okay, so let's dig into the heart of this puzzle. Just how pricey was this IPO, really? And why does that make this investor rush so fascinating? Well, to put it in perspective, we have to look at a key number called the price-to-earnings ratio, or PE. Lenskart came in at around 255 times its earnings. That is a seriously expensive valuation. A number that high would normally make investors hit the brakes hard.
And this wasn't some secret, The Financial Express was reporting on this right on the final day of the IPO, saying valuation concerns continue. So, yeah, the market knew exactly what it was getting into with this high price tag.
So, if the price was a huge red flag, what were the green flags that had investors flooring it? Let's break down the key things that were really fueling this incredible demand.
So here's the deal. It seems investors were playing the long game. They were looking past that immediate, steep price. They saw Lenskart as the #1 player in a growing market with massive future potential. You combine that with a classic case of FOMO, the fear of missing out, and you've got a recipe for a frenzy. And, as we're about to see, a last-minute push from the big money players really just sent it into overdrive.
Now, before we go any further, let's quickly get on the same page with a term you hear a lot, the gray market premium, or GMP. The easiest way to think of it is like the unofficial stock market before the real stock market. It's a sneak peek, an early sign of how much buzz there is around an IPO and what kind of pop people are expecting on day one.
And this timeline of the GMP really tells the story of how people were feeling. It kicked off strong at 70 rupees and even shot up to 95 on the first day, which created a ton of that initial excitement. But then, look what happens. By the final day, it cools right down to 39. That lines up perfectly with those valuation concerns we talked about. So while the initial hype was through the roof, expectations definitely got a bit more down to earth as things went on.
So who is actually behind all this demand? Because the story here isn't just about how much money was pledged, but who was writing the checks.
Now this is where it gets really interesting. Look at the first couple of days. Solid interest, but nothing crazy. Retail investors are pretty steady. But then, look at day 3. The number for QIBs, those are the big qualified institutional buyers, it just explodes. It goes from 1.6 times subscribed to over 40 times. That right there is the moment everything changed.
And this chart just makes it crystal clear. You can see how the demand from the QIBs, the big institutions, just completely dwarfs everybody else. Don't get me wrong, retail interest at over 7 times is really, really strong. But that 40 times demand from the big players, that's what took this IPO from just being a success to being a total blockbuster.
So why do these big institutions wait till the last second to jump in? Well, it's actually a pretty common strategy. They often hang back and watch to see how much interest is coming from retail investors and others. When they see a strong response, it gives them the confidence to come in with huge bids on that final day to make sure they get their piece of the pie.
Okay, so the bidding war is over. The dust has settled. Now, the focus totally shifts to the practical stuff. For the millions of people who put in an application, what happens next?
This is the million-dollar question for anyone who applied, isn't it? Because with the issue being this heavily oversubscribed, getting shares, especially if you're a retail investor, really comes down to a bit of luck.
The good news, though, is that finding out is super simple. You can just pop over to the BSC or NSC websites, or you can go straight to the source, the IPO Registrar's portal, which for this one was link in time. You'll just need your application number or your PAN to check.
And from here, it's one of two things. If you got lucky and scored an allotment, you'll see those shares pop up in your DMAT account by November 8th. And if you didn't, no worries, the money that was blocked in your bank account gets automatically released. It's a pretty clean process, either way.
So, there's no doubt the IPO itself was a massive success, all driven by this powerful belief in Lenskart's long-term story. But the final chapter hasn't been written yet. The real test, the moment of truth, comes on November 10th, when the stock actually starts trading. The big question is, will the market's verdict live up to all this hype, or will those initial worries about the high price come back to haunt it? We'll have to